After months of speculation about cuts to reduce a deficit clocking in at nearly $50 billion, there are plenty of belt-tightening measures in this year's budget. So the big question is, how will it affect you? Hello and welcome to this budget edition of On the Money. Although official income tax rates remain unchanged, Australians earning more than $180,000 will have to pay a budget repair levy. The levy is set at 2% of assessable income above $180,000. So, on an income of $250,000, a taxpayer will be paying an extra $1,400. On $500,000, it jumps to $6,400 a year. The levy will run for 3 years from July 1st, 2014, and will also increase the FBT rate in April 2015. Talk to us about ways to benefit from this timing difference. Fuel will once again be indexed to inflation. This will see the price of fuel rise by around a cent a litre every year for 4 years. This is expected to raise over $2 billion, all of which will go towards road funding. The company tax rate will be reduced by 1.5% in July 2015. This is expected to save Australian businesses around $4 billion a year. At the same time, the tax rate for some companies will rise by 1.5% to fund the paid parental leave scheme. The superannuation guarantee rate will now remain at 9.5% for the next 4 years. Australians visiting the doctor after July 2015 will face a $7 co-payment on general appointments, x-rays and pathology. This will be capped at $70 a year for concession card holders and under 16s. PBS prescription medicines will also rise by $5. From July next year, families earning more than $100,000 a year will lose access to Family Tax Benefit Part B, and access will be cut off when a family's youngest child turns 6. Family Tax Benefit Part A, Large Family Supplement, will be limited to families with up to 4 children. Family Tax Benefit Part A and Part B payment rates will be frozen for the next 4 years. Eligibility thresholds will be frozen for 3 years at July 2017. Government caps on university course costs will be scrapped in 2016, leaving institutions to set their own fees. Help debts will now have to be repaid once students start earning $50,638. TAFE, private university and diploma students will, however, have access to government support from 2016. The pension age will be increased to 67 in 2023 and 70 in 2035. Pension asset and income tests will rise with indexation for the next 3 years and then be frozen. From that point, the pension and equivalent payments will be indexed by inflation. The seniors card will also be harder to access given that untaxed super payments will be included in the income test. Chances are the budget will affect you. So if you'd like further information on these areas or have other accounting questions, we welcome your call or email. Thanks again for watching On the Money.